Hello and a very warm welcome. You know, every single day, trillions of dollars in goods are crisscrossing our planet, from the coffee in your cup to the phone in your pocket. But what's the invisible financial engine that actually makes all of that possible?
I mean, really think about it. Or what about the parts inside your smartphone? They travel across multiple continents before they're even put together. For any of that to work, a massive, incredibly complex web of payments and risks has to be managed. So, who are the people that do it?
Well, the answer is found in the world of trade finance. It's an entire industry built on specialized knowledge. And yeah, for anyone looking in from the outside, it can seem pretty complex and, honestly, a little intimidating. It's full of some pretty unique challenges.
But that's exactly what we're going to break down for you right now. By the time we're done here, you'll have a solid grasp of the core skills that keep our global economy moving, and you'll feel much more prepared to navigate this vital industry.
First, we'll get into how professionals master global risk. Then, we'll shift to the fight against financial crime. After that, we'll look at the specific tools they use every day, why communication is so crucial, and then finally, we'll pull it all together with a real-world example.
So, let's start with the first and you could argue the most fundamental skill, mastering global risk. A good way to think of this is as the shield that protects every single trade transaction out there. Okay, imagine you're shipping a container of valuable goods to a brand new buyer in another country. What if that buyer just can't pay? Or what if a sudden political crisis means the shipment can never actually arrive? Answering these what-if questions is the daily work of a trade finance professional. Their ability to manage risk is, without a doubt, the most critical skill in the entire field.
And the range of risks they deal with is just huge. A professional has to understand the financial health of a business partner, the political stability of an entire country, and even the internal processes of their own company. Let's zoom in on a couple of the most important types.
First up is credit risk. Now, this is the most straightforward one. It's simply the possibility that one of the parties in a deal, usually the buyer, won't be able to pay what they owe. So, if a bank finances an exporter based on a payment that's coming later and that customer defaults, well, the bank is suddenly facing a major credit risk event. Next, we have country risk, which you'll also hear called political risk. This is all about the potential for government actions or instability within a country to completely derail a trade deal. We're talking about an unexpected change in import rules, a sudden conflict, or new sanctions that can stop supply chains in their tracks and block payments entirely. So how in the world do professionals manage all of this? Well, the key is using what's called a risk-based approach. This just means they don't treat every transaction the same. Instead, they analyze everything, the customers, the products, the shipping routes, the countries involved, to figure out where the dangers are highest, and then they focus their energy and their controls right there. And that focus on risk leads us directly to our next key area. Because some risks aren't just about business going wrong, they're about crime. This is the crucial work of fighting financial crime to protect the integrity of global trade.
See, beyond managing the usual commercial risks, a huge part of the job is fighting something called trade-based financial crime. This is where criminals actively exploit the complexity of international trade to move illegal money, hide where it came from, and basically get around the law. The most famous version of this, of course, is money laundering.
Money laundering usually happens in three main stages. First is placement. That's getting the dirty cash into the financial system, like depositing it into a business bank account. The second and most complicated step is layering. This is like creating an impossible maze of transactions to hide the money's trail, often sending it through multiple countries and fake companies. And finally, there's integration, where the now clean money comes back into the economy looking like legitimate profit ready to be used.
And it's not just about hiding profits from crime. The very same complex, cross-border channels that make global trade work can also be twisted to finance terrorism, to get around international sanctions, or to hide bribery and corruption. The professionals in this field are really the gatekeepers who have to be able to spot all of it.
The first line of defense against all of this is a process called Know Your Customer, or KYC. And this goes way beyond just checking someone's ID. It's about developing a really deep understanding of a client's normal business, who they trade with, what they usually sell, their typical transaction sizes, so that you can spot anything that seems unusual or out of place. Getting KYC wrong can lead to enormous fines and legal trouble, so it is taken very, very seriously.
All right, so we've got a handle on the risks. Now let's look at the specific tools that professionals use to manage them. This is all about having a deep knowledge of the products and the market.
Just like a carpenter needs to know their tools inside and out, a trade finance professional needs to master a set of financial instruments. One of the oldest and most secure is the documentary credit, but you'll almost always hear it called a letter of credit or just an LC. In the simplest terms, it's a promise from a bank to pay the seller, but only if the seller provides a specific set of documents that prove they ship the goods exactly as agreed. For the seller, this offers a powerful certainty that they're going to get paid.
Now, letters of credit are fantastic for high-risk situations, but a lot of modern trade happens on what's called open account terms, where goods are shipped before the payment is due. For this, a newer set of tools known as supply chain finance, or SCF, has become absolutely essential. All the different SCF techniques are really about one thing: optimizing cash flow for both the buyer and the seller.
For example, a common one is receivables discounting. This lets a seller get paid early by basically selling their unpaid invoices to a bank at a small discount. Then on the other side of the coin, you have something called payables finance, which is also known as reverse factoring. This is where a big, creditworthy buyer arranges for their smaller suppliers to get paid by a bank right away. It helps keep the entire supply chain financially healthy and running like clockwork.
But knowing the risks and having the right tools is really only half the battle. This industry is always changing, which brings us to the absolutely critical skills of communication and adaptation.
The world of trade finance is in constant motion. New regulations are always coming out, new technologies are disrupting old ways of doing things, and the global economy is always shifting. Because of all this, a commitment to continuous learning isn't just a nice-to-have, it is a fundamental requirement for survival.
Success in this kind of environment really boils down to a few key things. Communication has to be flawless. A single unclear word in a complex contract can literally cost millions. This is why ongoing training is so vital. You have to stay current, not just on new regulations that can change overnight, but also on new technologies, like blockchain, that are fundamentally rewriting the rules of the game.
Okay, so we've covered risk, compliance, products, and communication. Now let's see how all these skills actually come together in practice. We'll walk through a real-world money laundering scenario.
Let's imagine a criminal organization needs to clean a large amount of cash. They might use a front company, say a seemingly legitimate import-export business. For the placement stage, they create fake invoices for goods, but with ridiculously inflated prices. For instance, a shipment of basic t-shirts that's really worth $10,000 might be invoiced for $100,000.
Next comes the layering. The payment for that $100,000 inflated invoice is sent through a whole series of complex international transactions. The money might be routed through shell companies in several different countries, and they might even use a manipulated letter of credit to make the whole thing look legitimate to any bank that's involved. Each step makes the money's true origin that much harder to trace.
And finally, in the integration stage, that money comes back into the legitimate economy. It now appears as perfectly normal profit from that import-export business. This cleaned wealth can now be used to buy property, invest in other businesses, or fund even more criminal activity, all without raising any red flags.
And this scenario is a perfect illustration of why all four of these skills are so essential. A sharp professional has to be able to spot the risk of an inflated invoice, understand the compliance rules being broken, know exactly how that letter of credit is being misused, and then communicate clearly to report the scheme and stop it.
So, to quickly summarize, a successful career in trade finance is really built upon these four pillars: mastering risk management, ensuring financial crime compliance, having deep product knowledge, and committing to effective communication and lifelong learning.
This field is definitely challenging, but it's also incredibly impactful, sitting right at the intersection of business, finance, and global problem solving. So as we finish up, I want to leave you with a question to think about. Looking ahead, what do you think will be the single most transformative factor, whether it's technology, regulation, or something else entirely, for professionals in this industry over the next 10 years?
We would genuinely love to hear your thoughts on that. Please share your ideas and, of course, any questions you might have for us down in the comments section below. And if you found this breakdown helpful, a like is always appreciated, and be sure to subscribe for more content just like this. Thank you so much for your time and for joining us today.